I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show, once again, Jag Sidhu, the lead developer of Syscoin, president of the Syscoin Foundation, and CTO of Blockchain Foundry. Jag, welcome back to the show once again, and thank you so much for taking the time.
Yeah, excited to be back.
Likewise, there's so much to dive into in part 2 of our interview. Now, we talked about the inner workings of Syscoin, how to make the best of what's the best on Bitcoin and what's the best on Ethereum and tie it all together. For the people who want to know about that, check out part 1 of the interview. It will also be in the description box below. Yet there's still so much to talk about with Syscoin and just with the industry overall, because we really haven't spoken in a while. So I would love to kick off our conversation by talking about the move of internet organizations into DAOs. And we're seeing a lot of protocols and DAOs popping up. And I feel like we're really early stage in the maturation of what DAOs will become, and how the biggest companies in the world will hopefully eventually be more transparent, democratized, and be DAOs. And I know Syscoin is also working on like a DAOSYS. And I would love to get your thoughts on the industry of DAOs and where they're at right now, and what DAOSYS is working on.
Yeah, I mean, the concept of the DAO started to exist right around when Ethereum came out, and
the DAO.
There started to be Turing complete stuff. So people like, wow, if you could do Turing complete finance, this means that you can have autonomous companies. You don't need companies anymore; just put them on there. But obviously, the DAO is going a little bit too far, and we've been working on those concepts since. And what we're working on is what the iteration of DAOs now are. They've modeled it after companies with shareholder voting and this sort of thing. And we've taken from a clean slate. We've forget all of that, because as soon as you have voting, because it's completely unregulated and it's anonymous, you don't know how many shares one person owns to be able to vote on that, and it's completely trustless unless that black box is completely compliant in a compliant layer where every user counts as one vote and you can check them. There is no sense of mimicking companies in that way. What we've come up with is a self-sovereign system that tries to, with no crazy speculative token either, like OHM or anything like that. Create a self-sovereign treasury management system and build a DAO off of that. Like how Gnosis is to multisig, the management system of the treasury will be to the DeFi space for managing the treasury. So every DeFi project has some sort of treasury or some sort of financial management system. This self-sovereign thing is going to be kind of the Lego blocks for all of that. Mm-hmm. And this goes back all the way down to economic philosophy. And are you Keynes? Are you Marx? Are you what type of are you Austrian? What type of economic philosophy do you prescribe to, and how would you run the world if you had the choice? And the governments are just enforcing those specific philosophies because the corporate environments there are set up with that philosophy. Like in the Western world, it's kind of a mix, laissez-faire, Austrian, Keynesians, basically a mix of both. And, in Dubai and UAE and some of these other, China and Singapore, a little bit of the other style where the government controls and dictates and does it pretty good, right? Neither are that bad. They've both shown crazy amount of growth. I would say right now, the controlled economies are actually growing much faster. But the desire to live in a country where you think you have complete freedom, whether it's real freedom or not, seem to be the kind of the theme of the last 50 or 60 years, where people wanted to live there. And therefore, those economies ended up growing a lot more, even with much more wealth. But now it seems that some of these others catching up. These are all economic philosophies. What this self-sovereign financial system that we're creating does is it kind of removes a lot of it or all of it, or removes the debate, because there is no government dictating how things will work in that environment. It's your own money at work. And so if you want to maximize your capital or grow your capital, or you're part of the ecosystem and you're looking for a job, and you want to provide value back to the ecosystem or provide knowledge back to the ecosystem, you can come in and ask, or start doing work for others. The people will put up funding, and their own funding, because there's a loan involved, they're borrowing funds to get stuff done. The loans are being covered by themselves. It's self-sovereign, and the interest is self-repaying because of the DeFi markets behind it. Technically, how it works is when you're using Uniswap, you create a LP token, right? The LP token is an interest-bearing position. Now, if you take that interest-bearing position and you store it into the DAO is going to give you a receipt saying, great, that's what we want. We love interest-bearing positions, because now you take your position, you can create a debt on it, a one-to-one debt. There's no counterparty risk or anything. There's no risk of that system breaking down. It's debt against your own. It's rebasing, and you are being paid out based on the DeFi interest on your position. And now multiply that by all of the positions in that treasury, and it's all being used to help you pay off your loan. So now really the opportunity risk is the only thing at play here. Would you want to invest in Joe or Bob? Which one can get their job done faster? So you pick the wrong one, then there's opportunity cost on should you have invested somewhere else. But there's no counterparty risk, right? If that person runs off, the only thing you lose is opportunity risk. You still get your money back over time. You can come back and pay. Now, I would argue even the banks, mainly it's all opportunity risk, because the Federal Reserve loans them out money at a lower interest. The banks lend it out at a higher interest. Now it's just opportunity cost. That's why they do these strict credit checks to make sure you pay off your loan. If you're going to default, tell me now, because I could just lend it out to somebody else who won't default. That's my opportunity cost. I'm getting the money for free anyways. I'm getting it from the central bank at a certain interest. I'm giving it to you at a Sintra. That's my profit. And if I choose the wrong person, that's opportunity. Same way, but there is no central bank interest rate here. There is no borrowing done from the bank to the central bank. You take your own money and you become a bank yourself, and you can loan it out to anybody. You probably want to do your diligence checks there, but you can loan it out to anybody. You can loan it out to yourself. You can borrow that money to build a home or just cash out or do whatever you want to do. But it's completely self-sovereign, and there's no risk other than opportunity. So in that case, now you can think about this as a new economic alignment with the broader ecosystem of the blockchain. And if you really think where this blockchain is going to be going, this blockchain stuff, it's disrupting finance, disrupting corporations, maybe even disrupting the way governments operate. Because now, as I was saying, if the economic philosophies are thrown out the window, the governments don't really have to prescribe to a specific policy. All their job should be doing is protecting the best interests of the citizens non-financially in other ways. Maybe there's no tax at that point because there's no financials involved, but they should be, they should be maybe even participating in the DAO. For example, if they want to be able to set up, there's a cost for infrastructure, cost for police, cost for military, this kind of thing. That's where you'd be using all a unified system. You can't print money. You got to be able to use money somewhere. So someone can fund you, and it's for the good of the ecosystem. There's going to be a few main blockchains out there that can actually securely and in a decentralized way serve these systems. And these all end up kind of being like, you have your markets today where you can go and like Fiverr.com and these sorts of where you could just go get a job and people will pay you for $5 to build something. Mm-hmm. You don't have to have a long-term job at a company to do that. It's kind of like that, but on steroids, because now there's going to be a market there for lending and borrowing, and it's fully autonomous. Instead of, you have to find somebody, they have to sign up, then they have to pay you with some currency of choice, and then there's no one to really arbitrate, and it's up to you to find, like, there's going to be, it's completely self-sovereign, it's governed by a smart contract system, and it's on the blockchain. So you get all of the benefits, all of that, and you still get the Fiverr.com use cases where people can come in and find a job. It's going to be global, where anyone who needs to get a job most likely will be coming to these sorts of systems. And if that's where all the jobs are, that's where the economies are. If that's where the economies are, that's where the corporations and this sort of thing are set up. So it's disrupting corporate finance. It's disrupting the model to achieve interest. So in the UAE, there's Sharia compliance, and they're big with that. They think that's the way the world should operate. And that's never really been possible, because who would lend out for zero interest? So they've got some other pseudo ways to collect rent off of the borrowed money. And this is probably the first example of that can give back in that way without creating a surplus. It's a zero-sum game. You lend out your own capital, and you end up, the DeFi market's covering you. It's an opportunity risk, but you choose wisely on who you want to lend to, what you want to build. And most likely, you're going to be benefiting the ecosystem, because whatever you're lending out, you're going to choose maybe someone who's going to be benefiting you, who's going to build on that ecosystem. So, in the impending, what I call the knowledge economy, which is where IoT and AI and robotics starts to take over the manual labor in our economies. Really, what's left is just specific domain knowledge that we have that cannot be replaced. That's where the jobs will be. And you'll be worth your weight in gold if you have some sort of knowledge that can't be replaced. So in the knowledge economy, this is where people will be going to get stuff done, because you'll be paid for it in a market. There's going to be physical work still happening, but those markets are kind of going to be migrated away because of automation, right? So this is the way I see in a potential future. It may not be happening right away, may not even be in our lifetime, but we see this is unfolding, and we're laying out the kind of the ground rules for this building blocks to be built. And then we can start to go into why even public permissionless smart contract systems aren't ready for Alice and Jane and Joe right now as well.
Definitely. Yeah. Great insight there, and very forward thinking, beyond our lifetime even. And I feel like where we're at with DAOs, with the DAO back when Ethereum was created, was like the simplest errors of like smart contract error to siphon the funds. But now moving beyond that, you talked about like having the voting rights, and I feel like there's a lot of issues, as you mentioned, that with that. And what I'm seeing right now is, we saw with the Rome DAO or Ohm, there's almost like there's potential for collusion for people to talk to each other and be like, hey, let's team up to work our own position into the DAO. Or the anonymity, where we saw with Sifu ended up managing all of the funds, and it ended up being somebody that wasn't that trustworthy, managing hundreds of millions of dollars of other people, and they didn't really know. And we talked about in part one how proof of work in Bitcoin, and like having that system that has like a self-interest, and if you try to go against the Bitcoin network, then like you're punished for it and it doesn't work. I feel like that incentive mechanism working in a DAO would work really well.
Yeah, I mean, right now the smart contracts they're so very early. Some say the standards haven't even been set, like it should be standard programming languages like C++, and some are moving away from the Solidity. But I feel like Solidity has captured the market for general purpose smart contracts, and there's courses and universities teaching this stuff now. The problem is the contracts, the Lego blocks that have been built are not adequately secured, and there's all sorts of complexity, and the scale, as we scale up, we're getting all sorts of new use cases and new Lego blocks that may not be sturdy. As we get new use cases, you got people like in India sitting in their basements figuring out new use cases with little to no help, because they're using their imagination, because they're not incumbent to the scale problem anymore. So you'll get 10 to 50x new use cases as soon as we get these layer 2s and modular designs. But then you get 10 to 50x new hacks because these new use cases funnel money in. People are excited about it. They open up a universe of opportunity, but they open up the attack vector because there's no barrier of entry to this stuff. So having the right Lego blocks, what does that even mean? When will we get there? How do we proceed if we don't get the Lego blocks? As a Bitcoin fundamentalist, I would say that's why Ethereum doesn't work, because at some point there's always going to be a new use case that's going to funnel money out. It's going to keep shaking the confidence, keep shaking the tree to extract as much money as possible, and scammers galore. And that's why I need a simple system that just stores money. That's it. That's all you need. You can't do more. However, I come from both sides now, and I can see that, yes, that's true today, and Bitcoin people have a point, but it's not going to be true in the future, because this is the sorts of things we're working on to create those Lego blocks. Let's just start with treasury management first, nothing else. Let's not focus on GameFi or NFT markets or anything. Let's just focus on managing treasury, because that's the core fundamental principle of all of this. Hacks usually happen on the treasury, nothing else. There's usually phishing attacks and that sort of stuff, but that's UX related. We're talking about this right in the smart contract. It's usually hacked right in the treasury. So if we create the building blocks of the treasury and we say this has been audited and secured, and this is, for us, that's our foundation, and everything built on top of that will be built off a solid foundation. That's when the fundamentalists on the Bitcoin side, they really have no choice but to acknowledge that this is actual innovation and not just copy pasting a blockchain idea from Bitcoin and adding in an IEO or ICO and trying to make pumps and dumps and all that. It's about letting those Indians or Africans make money to get out of the gutter so that they could raise money. Go ahead, why not? They don't need to be accredited investors or reach out to accredited investors. They should raise money from anybody, but they know that they're on a solid foundation so that the smart contract level security is there. So that's one thing that the problem is right now is it's hard for the whole industry to kind of build on the same foundations. So, compliance is necessary, I would say right now, as a stepping stone to get average people in, because the average people, they have no awareness of the stuff. They can't audit the code. They have no clue if it's safe or not. They need to be able to have assurance that they're not going to get rug pulled by accident, by a hacker, not by the guy who's running the project. 99% of the time, that's fine. It's the guy's probably doxed, or those sort of projects people are not going to invest in. But it's all about an attacker that can come in and pull the liquidity, and now everyone's hooped. We've got to avoid those situations. The only way to do that is having solid foundations. So compliance is a first step. In the next few years, going to be critical. That's stuff we're working on as well. And then the open permissionless stuff, once we have some semblance that, okay, the foundation is solid and we can trust the stuff, and there's been no hacks for many years on this stuff.
Mm-hmm. Definitely. I feel like there's still hacks fairly frequently. And, you talked about being a Bitcoin fundamentalist there and sort of the problems with Ethereum. I'm curious on your take on, the shifting narrative of the main purpose of Ethereum, and at first it was, before all of the other narratives came in, it was, just to create a world computer smart contract platform. But then it was like the main purpose was ICOs and creating new projects. And then it was and DeFi and creating the world of finance. And then sort of shifted more to like NFTs and helping artists, bringing ownership. Do you see it as like all of these narratives, or like, do you see something wrong with the narrative continually shifting to something new as it sort of moves up and then loses hype?
Well, I mean, the Ethereum Foundation has not taken a stance on anything. Like, these narratives have come up on their own. It's because blockchain wasn't used at scale, right? The 7 transactions a second was never really capped until you had CryptoKitties. And that was like probably the NFT DeFi boom. Before that, you just didn't have enough people using the system. So you had, great, I can make money by raising tokens. I don't have to create a blockchain. I could just create a token on this thing and raise money. Let's do it. And then, okay, well, now we have smart contracts that could do all sorts of cool stuff. Let's start building apps and now focus on the app layer and raise money that way and make money that way. So those are just what I was saying was, every time you enable that scale, you get all sorts of use cases. Those were the main use cases that came out just by capping the scale of what Ethereum can do today. Now, imagine if you can do 10 or 100x scale, which is what the idea behind the foundation of moving to proof of stake was. When you have sharding and proof of stake, potentially we can get another 50 to 100x scale. And therefore, who knows what type of use cases will come out. But we're not going to dictate those use cases. They're going to happen on their own. These are people that are usually students that are learning this stuff and have really good imaginations. They come up with new concepts. The world is working feverishly on what they value as is going to help them their own situations make money, and other people latch on because it's a great concept and there's a first mover advantage, and therefore you get this feverish push into all this stuff. What we when you do scale up, you get much more. Now, the whole issue was with proof of stake and sharding. You do start to get away from the Bitcoin side of things, of the secure elements of the system. And Ethereum people say, no, it's much more secure, but I would argue there actually is situations where it technically cannot be as secure, like if the hyperinflation kicks in, or state-driven attacks, if someone wants to print a bunch of money and then all of a sudden before inflation kicks in, they just control a whole bunch of this stuff. And now inflation is kicking in, they have complete control, and the cost of mining Bitcoin it only goes up during inflation because you can't produce different ways to make energy. You can't inflate energy. So there's no way that the cost of Bitcoin production would go down. The cost of Bitcoin might go down short term under the cost of production, but long term it should always be around the cost or above the premium. Because people see that as hard money, they'll hoard into it, and it probably should create the ratio between something like ETH and Bitcoin. Bitcoin will go shooting sky high because of the premium, and ETH may or may not, depending on how hard it's perceived. In that situation, it becomes easier and easier to attack those sorts of systems. Now, is that a viable outcome? I don't know. I just know it's something that would happen, and it's something that you cannot contain in a system perspective. It's an externality that you can't contain. On paper, the system looks great. Data availability sampling and sharding looks great. It's a very low probability that you'd ever get any type of conflicts in that system. But externalities is where you potentially can have those systems break. And the Bitcoin system has survived. I would say nations have tried probably to go after it, and they've found the game theory doesn't work out, because if they're economically trying to attack the mining component, they end up losing money and it keeps going. If they try to buy Bitcoin up to attack it, what's the game there? You just try to dump it. People are smart enough to hoard around that. You can try to short the market, but you have to buy it up again at some point. And so, every other scenario ends up looking like we're taking a little bit of a step back from the security and decentralization. And we take the fundamental stance of those ideas are great, of data availability and layer 2 execution. Just don't think that you're solving all the world's problems by switching to this proof of stake system. You didn't even have to switch to, because we can scale this thing up to thousands or tens or hundreds of thousands of transactions a second. As Ethereum is today, you can scale it up. The proof of stake system was a mandate set by the foundation back in 2016. And now, because of the World Economic Forum and the green initiatives and all these political pressures, they have to, and they're going to switch. So that's, for us, we need to offer an alternative to the world, so that they can still have that secure system, but still get all the benefits of what Ethereum came up with. So I'm not taking away all of the innovation of that. What they've done is great. I think they're ushering in a new world, but you've got to do it. I think you just got to stick to the fundamentals, and the Bitcoin community would agree with that. Sticking to the fundamentals makes sense. Definitely.
And it's crazy to think they're going to be, switching the consensus. People have made the analogy of like, it's a jumbo jet flying, halfway through a flight. and it's full of passengers, and then they're going to try to change the engine out while it's flying, into a whole new mechanism, and hopefully nothing goes wrong. Do you see when that specific event happens, do you foresee potential catastrophes?
Yeah, there's a lot of risk in that sort of system, but they're spending a lot of time to try to make sure that won't happen. But if anything can go wrong, it probably will. I hope not for the industry, because if something does go wrong, it will be bad for everybody. It will shake the industry, and Bitcoin is not going to be excluded from that event. I don't know for how long it would affect something like Bitcoin, but it will affect Bitcoin. So I hope it goes seamless. Long term, I just it's one of those things that, great, if it works, awesome. Let's we're there as an alternative, but we're still pushing and rooting for Ethereum because they've brought these innovations. Without them, those innovations would not have happened. But someone would have still come up with Turing complete smart contracts. It would have taken off the way it's taken off. Now, I'd say the EVM is well designed. It's done its job. It's gotten traction, and we figured out how to scale it. And what else could you ask for? Like, they've given the world something that's so critical. So I definitely hope that we can, usher in this new merge, and it actually works, and people get really excited about it. Industry does a 10x because of it. You see all sorts of new use cases. The academics become excited and jump in. We see a whole new bunch of research happening to scale up and do more things, and digital identities and all the sorts of things start coming to life. We'll just be there, right? We're going to be in the guts, working on this in the trenches, offering our solution, and it's like an alternative that's like Bitcoin and ETH put together. But ETH by itself, it's going to have its run. It's going to be interesting. People are going to be excited, assuming that it just all works, and hopefully it does. I can't say if it will or won't. But, no, they got some smart people over there, so hopefully it'll go pretty smooth.
Definitely, yeah. And as you mentioned, it's like there's cascading. If it doesn't work, then there's potential negative implications for all of cryptocurrency, and it hurts everybody. And we're all trying to grow together. So good insight there. Thank you for bringing all that information on the DAO, DAOSYS, and like the future of DAOs, and like the problems that we're sort of facing right now. For people that want to learn more about your insights on that and sort of follow along with DAOSYS, what is the best way for them to learn more?
Oh yeah, there's a light paper out on DAOsys.com, and it's probably like a work in progress. We're just going to be updating or making an official white paper kind of thing, with some modeling that we're doing on the science side. So yeah, look forward to that. You guys can go to DAOsys.com and check it out, and there's the papers on there are just general how-to of what it is. Mm-hmm. I guess things like it, maybe AlchemX V2 is kind of very similar, but the difference between AlchemX V2 and what DAOSYS is a unified treasury management system, not a specific treasury management system. It's unified across all debt in the system, compared to specific tokens in AlchemX that there's debt markets, and each are isolated. In our case, we're indexing the entire system and the entire debt system, and other systems can plug in to ours. Like we can actually help AlchemX, we can help Aave, we can help balance their curve, and they can use our code, and then we build a DAO on top of that. And other DAOs, the other innovations we're doing are kind of like the ability to upgrade smart contracts in a way where you don't actually have control of the smart contract. Like right now, a lot of the upgradability happens because you actually own a proxy, where you actually have authority to change the contract, which means you have complete custody over everything that happens in that contract. What we're thinking about doing is having, once you have the Lego blocks built up, they're built off what are called factories, and you can actually ping other contracts and say, are you part of our factory? Did you get built in our factory? If you did get built in our factory, we can trust your treasury management side of things, and therefore you can work with us. We'll push value to you, and we'll become friends in a smart contract sense. And other DAOs and other projects that come from the same factory systems can just plug in this way. And there's a semblance of contract to contract trust, not people. It's more like the smart contract can trust you. Therefore, it opens up a little connection, like a little bridge where you can actually use those systems internally. So that's the way we think about it. And the way an upgrade would work is we essentially are just copying that contract with new feature, and it's from the same factory. So users of one can have the option to just move over to the other one. It's a copy with a new feature. You don't actually change the first contract. You would say, no, we're giving a new contract, but we've registered it. And so you can use this contract to just click and say, oh, I'd like to leverage this new feature, or I just want to stick to this one. I could keep using this one, or I could use that new feature over here. And here's the new feature, so let me just move my value there. And now I'm on the new one, completely safe, because it's part of the same factory system. It's checked in the contract, and I'm now have access to this new feature. So these are the sorts of things we're thinking about before we even get to the DAO. We think about the upgradability, the Lego blocks, the treasury management, and then the DAO concepts after that.
Incredible. Thank you so much for taking the time, Jag. I will leave the DAOSYS link as well in the description box for the viewers for easy access. All the best with everything on the DAO and everything on Syscoin and Blockchain Foundry as well. And let's follow up in the near future.
Yeah, thanks, man. Thanks for having me. I'm glad to maybe once it actually comes out, glad to jump on again and maybe demo it.
Definitely. Would love to have you back.